The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us on your mobile phone at tfnn.mobi. And you can also check us out on Tiger TV at tfnn.com and see our screens and charts as you got 9 hours of live trader commentary happening each and every day. So right now, let's look at where the markets are at. We got the S&P pretty flat at the moment. Right now, it's up a point. We have the Russell up 2. We have the Nasdaq is up or down a point right now. And then looking over the Dow, it's up about 30 points. Copper right now is down almost 0.5%. We got gold is currently up $4. We have silver is down almost, working on 1% right now. We got natural gas is flying down 11% again. Insane. 2 days in a row, it's flying like crazy. We got oil is down $1.20, over 1% move on oil right there. We got corn is currently up just $1.50. Soybeans up $7. Euro dollar is currently up 19 pips. Aussie dollar down 7. Pound dollar sort of leading the pack up 43. We got dollar franc is currently right now, it's like it's down just 24. We got dollar CAD up 14. We have US yen down 31, Aussie yen down 34, Euro yen down 21, pound yen down 14, and Euro pound down 16 pips on the day. So that gives us that's sort of a nice wrap of, like I said, where the market is. And we were talking a little bit earlier this week, sort of, just going through the news yesterday, and just trying to find some of the best, potential trades. And when I was doing that, a couple of things that we found were just not a lot of news trades. They're just great stats for this week. We have, a couple of them that we can look at. But I wanted to go through those and really, recap them with you, make sure that we, you have them down, you have the stats down, you have the plan down on what you're going to do and how you're going to do it, so that way you have a solid plan on trading the news. And even if you're not going to trade the news, you want to be aware of the news, because you want to make sure you know when certain announcements are coming out, because they can impact, certain ones especially, can have a large impact on an instrument. If you're not aware of it, like let's say you're trading oil inventory, or you're trading oil, and you don't know about oil inventory, that thing can kill you. So natural gas inventory, if you're trading natural gas, so just things that you really, really need to be aware of as you're trading. So anyways, we got a few news announcements of the week, and I'll go through the plan with you and what we're looking at. But what we have, like I said, not a whole lot. Only a few, high impact ones. The pound quarterly GDP. That's going to come out tomorrow morning at 4:30. Okay, so again, tomorrow morning at 4:30, we're going to have the pound quarterly GDP. Now, this GDP report that's coming up tomorrow is not the preliminary GDP. The preliminary GDP is the best one. So you might decide to sit aside on this one. That obviously would be completely up to you, but I want to go through the stats with you so you have them. We do usually get a pretty nice move, pretty consistently over the last couple years on the pound dollar. We have about a 70% probability of breaking the 50 pip mark over the last couple years, and over the last 5 years, 69%. Also, our average high to low is 70 pips on that specific report. And so if I look at it, the big thing now is going to go in and look at the actual times when the announcement came out. And so we're going to do something a little bit different today. We're going to go in and we're actually going to pull up all those charts and see how they look over the past 12 months. And let's see here. So I'm going to pull this chart up for you. Got pound dollar. Get rid of any drawings I got. I'm also going to get rid of most of my indicators off of here. Get rid of that. We'll get rid of few things, okay? And just really make the chart very, very clean. The only thing I'm going to leave up there is deviations. They won't plot all the way back forever, but I meant to get the wrong one on there. There we go. Okay, deviation levels there. And now what I'm going to do is, to make it a little bit easier, I'm going to make my data on, let's see, this report comes out consistently at 4:30. So I'm just going to use 30-minute bars. That's going to make my charts a lot faster to load there. And then I'm also going to load back the last year of data. So we can sort of walk through these and just look at them. You can sort of see, some of the method that I go through consistently. And one of the things that helps when trying to scroll back and find specific dates is the data box. So let's see if I can get that, if it's hiding somewhere. Let's see, where is my data box? All right, gotta love we got a bazillion charts. You'll see stuff floating around everywhere. There it is, way off over on another monitor. Okay, so I'll put that up there, and I'll make sure to mark that as always on top, and that makes it a lot faster for me to scroll. Now we're going to look at the second estimate GDP. Now we're just going to check out the last 12 months, which will take us back to really February of last year. Okay? February of last year. We're going to scroll on back here. And as you can see, one of the nice things is this is telling me the date right there, so it makes it a lot easier for me to move backwards and look at it. And if I scroll on back to February 25th. All right, so now let's February 25th, and we want to look at 4:30. And usually I like to see maybe a little bit wider time frame. I like to see since about midnight on the trade to about 7 a.m. And this is to allow me to go, hey, would this be a good trade potentially for me to go in and straddle or strangle, or what would have been the best time to get into the trade? So the little things that I'm looking at. So let's say we would have got in at midnight, which is usually what I look at doing on these pound dollar 430 trades, mainly because I'm not up at 4 a.m. And then we'll test, how far up did it go between pretty much midnight and 7. Okay? So we saw we got a high up here of about 39 pips. So again, this is the second estimate GDP. And we're just going to look at the last 12 months. So I got the stats on the 2 years, but I always like to look, current stats and see how they did. And then if we go to the low from that high, really wasn't a big mover right there. Basically, same thing, about 39 pips. We got about 39 pips of movement, and we ended about where we started. So this would have been probably a losing trade unless you were up in the morning and looking at it. And let's also look at, what if you got in right before the trade, it went down to, or went up to a high of 17. It went down from the release to a low of, it's like a 21 right there. So, 430 would be the close of the bar, so I need to, because that's right when the release came out. And there we go. So 31 pips, and then down 7 pips. So basically, if you would have saw this thing moving, one of the things I'm going to notice right away is we're at 630, and at this point, you're probably somewhere close to break even, not even quite at break even on the trade. So looking at this from last February, basically the same trade we're looking at now, then you may want to look at that, and then let's look at the February 20. I want to make sure I get the 24th for double check this one. Sorry about that. I think I may have been. Let's go further back. We'll go to February 24th. I want to make sure I'm on the right date. Okay, so actually I need a little bit more data. That was my problem. I didn't have enough data loaded. So we need to load a little bit more because we're going literally 1 year back. So I'm going to load like 367 days. That was the problem. All right, so we're going to have to restart on this one. But scroll all the way back here. That's going to bring us to February 24th. And I might even want to add a few more days. Okay, so we'll see. They may not give us data that far back. All right. So, anyways, either way, it looks like same result on that trade there. Not really a big mover. Oh, wait a minute. There we go. Yeah, we actually got a big move. Oh, nice. All right, here we go. Now I get to give you the real stats. Okay, February 24th. So we're going to start over, ignore everything I just said, because I was looking at the February 25th of 2011 stats versus the February 24th. So February 24th, right here, we got 38 pips up. We got, between this point and 7 a.m., all right, we got about 44 pips down. And then let's just look at, where did it close at 7? And it closed about at the same price right there at 7 o'clock. All right, so on this one, what I'm seeing is, one, we had a nice big move on the, a little bit early. Okay, so right here, and let me see if there's a time zone variance, because that's one of the things I always have to look at when I'm really digging into it. Yeah, it's 4:30 Eastern time. So it's interesting. I found that some news reports will change their, if it's normally 4:30, they'll make it 3:30 when the time changes. Other ones will leave it at 4:30. Okay? So, and so you always want to be aware of that. It actually may be a 3:30 release just because the time zone variance is not built into the chart. Okay? And that was probably the actual release time right there. So it's just that 3:30 last, with the time zone changes. But either way, what we do see is that there is a pretty substantial potential move, but really the best time on this trade, really the only time to have really taken advantage of it would have been maybe at best getting in around 3:30, 3 o'clock on the trade. So that trade really, bottom line, unless you just perfectly timed it, which you're not going to do, probably didn't work for you. Okay? So let's knock out February, say, okay, we're just going to call that one most likely just a losing trade. And let's go back. Now let's check out the next trade. Okay, so the next one got released in May 24th. And so let me bring back up my data box over here. And I got it on my other screen now, makes it a little easier. So we can scroll like that, or the faster way is just simply right down here. We'll go in. That's our Feb 24th one we just did. And then we'll go on to May. So now, instead of having to look at it, I can just look down at the bottom. I'll show you what I'm looking at. I'm looking right here at the date on this. And now I can just grab the scroll bar and move right on over to May 24th. So we'll analyze, a year of these trades to see if this is one that we want to do. Because remember, I said this is the preliminary, or the second estimate GDP, not the preliminary. So it's usually not as big of a shocker. And I want to see if the last 12 months has it been as big of an impact as it has in the last 24 months and 60 months. All right, stay there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going in, we're looking at them step by step. And so a couple things I want to notice is, one, on the February one, the one that lost, it only went up about 30, 40 pips. Unless you're just babysitting it or something, maybe you were able to get out at close to break even when it popped back up there. But it pretty much settled flat, at 7 a.m. So this is also something that I like to notice. It's like, hey, we're up or down 7 ticks as of the 7 a.m. expiration on this pound dollar second estimate GDP. So now let's hop on over to May. And let's see if we have the same thing. Okay, and we'll see, what are our total stats? So right now we got one butterfly possibility, or straddle or strangle loss, without, perfect management. So we're trying to do more consistent rather than perfect. And so let's go to May 24th. All right, this one ran up about 54 pips. It settled at about 37. You probably would have had somewhere between $30 and $40 risk on the trade. If you weren't up, then your take profit, which was probably going to be like 70 pips away, wouldn't have got hit. You would have got about a break even. But we do want to note, so if you're doing this like in Excel and stuff like that, these are, like I said, I'm just trying to show you some of the stuff I do, and we're actually building engines right now. I got a trader who has helped me out, who is a Oracle database engineer, and he's helping me build a bunch of queries on like 10 different levels. So I'm pretty excited about it. It'll let us really analyze these news trades in a lot of different ways. But, taking all this knowledge and then going, okay, how can we make it fast? So not only can we analyze pound dollar, we can analyze every other pair in the process. So right now we have one that went up about 39, and it settled at like -7. And then we have this right here. We have one that went up 54 and settled at, up 37 ticks. Okay? So, I'm just sort of logging these as we go. And then now let's look at the next one. We got August 24th. Okay, so August 24th. We'll go in, we'll grab the bottom part. It's a little easier. Skip on over to August 24th. Okay. And that's a little odd. Right there. Okay. So, all right, so we got 2 of those dates, but we need to get more dates. Let's see here, just the way that this is released. I'm going to try to add in, see how many total dates we can get. I don't know how much data Ninja will give me backwards. If they'll give me as much back as I want or not. Let's see. Nope, not that much. Let's see here. That's sort of weird. That narrowed it down to a lot less days. Okay, sorry. Give me 1 second. I may, let's see. Thinkorswim will give me, they'll give you about 90 days back. And I think maybe if I change this over here, we'll go a little bit lower. Okay, so in that we got 2/24/2013. Now we're going to double it up to, what is that, 730 days back. See if it'll give me 2 years back. I don't think they're going to give me that far back. No, they're just going to give me back to 2/21. Okay, so we're going to have to just analyze a few of the trades on here. We're going to narrow it down just to the ones on 2013. Okay. And for the last year. Like I said, I have the stats for the last 5 years, but just as far as looking at the Ninja Trader exercise. So for 2013, I was trying to pull up 2011, 2012. 2013, we're going to go ahead and focus. All right, so we got February 27th for 2013. That was the last release. By the way, where am I finding this data? Finding it right here on Forex Factory. And go to second estimate GDP, and it will actually give me all the dates for the releases back for years. Okay? And I got all the way back to 2007. So it's very helpful to find, what date to go to. So if we're just going to analyze 2013, then we're going to have to go to February 27th on 2013. And we're going to have to look at, I'll verify the time of all the releases, because I want to make sure I get them all right. And what I'm doing is I'll just click. And I mean, this is a very manual way to do it. I don't do it this manually. I have more automation, but I just want to show you a way to manually do it. Is I'll just right-click on it and I'll say Open Link in New Tab. And then that way I can see all 4 releases and the times. See, notice some of these came out at 3:30. Then it went back to 4:30. So it's very important that you know what time it came out. Don't just assume the date it came out at 4:30. So that time zone change, this is one that they keep. They release at the same time. All right, so now that we know that, now we're just going to analyze these last 4 trades, and we'll actually get somewhere on the next segment. Stay right there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And so what we're doing is we're going through, we dropped all the previous information because we're just trying to get some chart data to load. And so we're sort of starting over here on this report and looking at the best potential way to do the trade. For the pound-dollar second estimate GDP, it has an average of 70 pips, but that's a 70 pip high to low. So what I need to go back and look at on this trade, and so what I'm sharing with you, is on the 70 pip high to low average, is that 70 pips up, 70 pips down? Where does that start? What's the best time to enter? What's the best expiration? All that. And so I found on this one, now some of the trades I'll enter at midnight, okay? On this one, what I found is if I got in at midnight, I got a 51 pip open to high, and basically to settlement, we go, I think that's going to be 7 a.m., 6:30, yes, let's go a little bit further, drop back down. Okay, 15 pips. Okay, now if I chose to get in at 1 a.m., for 7 a.m., I got 82 pips. Okay, so I got midnight, and I have 1 a.m. At midnight, I only got a 51 pip move because it dropped first from the oscillation, and I had basically a 15 pip settlement. At 1 a.m., I had 82 pips, more than enough to have my profit, and 44 pips, which would have been probably a break even if I didn't hit my take profit. But you should have definitely hit your take profit on an 82 pip move. All right, so 1 year ago, this trade worked or broke even, one of the two. So now let's go back and let's look at the next trade, which 3:30 a.m. on May 23rd, 2013. Okay, and so right here, appreciate your patience. I'm putting all this together. So doing this live. And so May 23rd, a little bit further. Here we go. And a few more days over, and we'll have May 23rd up. Okay, May 23rd. And we can see, did this make enough movement or not? And so we'll look at it and go, okay, so we got midnight right here. And we got to 7. Which I believe that'll be the 7 a.m. high. Got about 66 pips. Now what if we went with the 1 a.m.? Okay. Then we got about 45. Okay, so on 12, entering at midnight, entering at 1 there at 12, we got 66 pips. At 1 a.m., we got 45 pips. What about entry to close? So let's say take profit wasn't hit, depending upon what your profit was. We go to close. For the 1 o'clock, we had 37 pips, which your risk is probably going to be somewhere around 35 to 45 at most. So 37 pips on the 1 a.m. And then we have right over here, we'll take the midnight to close. We had 58 pips. All right, so 58 right there. Also, just a note, something that I noticed is, on the last one, it trended down, so to 1 a.m. This one trended up to 1 a.m. Now, this may mean nothing, but it may mean a lot. It's just a matter, like I said, of going back and looking at everything. But if we find that trade again, just to show you what I mean, a little bit further back, there we go. And the reason I look for this is sometimes you can actually get an additional entry, depending upon if there's a consistent pattern. So we had a trend down to 1 o'clock, and then the market went up, okay? And another thing to notice is it went up, and it went in after 1 a.m., it went in the direction. I mean, it was very trend-worthy. It went in the direction of, the big move on the news. And the news was, it came out, let's see here, came out at same expectation. So it hit expectations. So it went up, it trended up, and it hit expectations. Okay? So now if we go back over to May, see, okay, what kind of pattern do we see there? And like I said, I'll look at years of this. So we're just trying to show you on a few of them. But so we go back over to May 24th. All right, so it trended up at 1 a.m. Then it trended down till 3, so it was really choppy. So down till 3 a.m. And then it trended up into the news. Into the news from there. Okay? So far, both of them have trended into the news past 3 a.m. But the second one here was a little choppier. And notice the second one was a little choppier, a little bit harder on the 1 a.m. as well to do a trade. So, and because what we can see right here is it went up and then retraced back down there at 2. So now let's go through, let's look at August. Let's see, I think it's going to be August. We got, August 23rd, 2013. Okay, so go in here, and I'm going to pull August a little bit further. 23rd. Okay, so right here we're on August 23rd. Preliminary GDP release came out at 3:30 a.m. Okay, that just came out right here a little bit earlier. And let's look at midnight to the high or low of 7 a.m. So there's our high. Okay, we got 55 pips. We go 1 a.m. The high right there of, let's see, 7. Is that? Oh, we actually got to go. Well, that's the high. Now we also can measure to the low. Okay, so midnight to the low of 7, which was not really that big of a move there. 9 pips didn't really help you at all. So we'll get rid of it because it didn't retrace back enough to make a difference. But midnight to high, midnight to, and then 1 a.m. to high. About 56, 55 pips. Really didn't matter which one you did. That's pretty much how far it went. Okay, so we got 55, 55. Now our high to low, and this is what I'm always talking about, high to low number. Let's check our high to low right here. We got low to high See, that's 65. So that's where it can sort of mess you up because you're not considering that it pulled back 10 ticks and then ran up, 65 ticks from the low. Now this one, it trended down, and then the release started here at 3:30. That's where you see that all of a sudden it starts going crazy. But notice it trended into the release direction at 3 a.m. as well. So at 3 a.m. we had that same thing happen. So it trended down, then back up at 3 a.m. in the direction of the release. Why do I keep looking at this? Because if you were trading this, or on maybe another trade where you're not up, or maybe you are a Euro time trader, if you see this as a consistent pattern, then you need to look at more than just 4 releases. So you need to look at least a dozen, maybe 24 releases. But if you see this as a consistent pattern, then you could add into a position right here before the release on your long. Okay? So just like one side. And now I'm talking about doing like either a binary or a low risk spread. And so now what about the close? Where did it close? We keep tracking that. And so what I want to see on here is the close for 7 a.m. All right, so we got 20 pips from midnight. And we got 20 pips we got from 1 a.m. We have 21 pips. So basically the same thing. And so I'll note that in there. And notice the last one, we had a pretty big move. We had that 58 pip, went right back here on the previous one there on May 23rd. So it actually had a larger move than the other ones. Right there as of expiration, we had 58 pips from midnight, but only 37 from 1 a.m. And you'll see where all this information comes together here in just a second. Okay, now we want to go in and I want to look at the last one we got on the list here is November 27th, 2013. So let's see here a little bit further. Now we're getting into deviation territory here. November 27th, so we'll check that one out. At midnight to 7 a.m. high. Got 108 pips on that trade. Okay? From midnight to close. So this was the last report. We got 98 pips. From 1 a.m. to high, we got 110 pips. From 1 a.m. to close, we got 101 pips. So pretty big move there on the last release. Biggest move here in the last year. And let me see, what do we got? So we got 108 with a 98 pip move. We got 110 with 101 pip movement on close. And do we see another similar trend? Now this release came out at 4:30. We see that it's trending down. And then by 3 a.m., on this case, we actually, now 3 a.m. before, remember 3 a.m. was 30 minutes before the release. Okay? So we want to look at, 4 a.m. But so it's going back 3:30. It's actually starting to trend back up. So it does trend towards the direction going into the release. And that hour before the release, we are trending back up. Now we didn't get a pretty flat bar right here that didn't do anything. We got a little bit of an up move right before the release, and then bam, it takes off. But it also trended back in the direction of the release. So we got trend down and then back up. Now in this case, it was 3:30 a.m. in the direction of the release. And then I can note that 3:30 was 1 hour before the release. And the other ones, 3:30, we can go back and look at those. And then I'll pull all these stats over here on the side, and we'll talk about what they mean, how do you apply them, how do you use them. Again, you want to get a larger data sample than what I'm giving you right now, but I just want to see show you how to look at it. If we go back and look at the August 23rd, right here, a few more days over. There we go. See, it's going down, but the release happens at 3:30. Okay, so we see at 30 minutes before the release, it is trending in the direction of the big move that happened up to 7 a.m. So, really, so at 3 a.m., 30 minutes before release, I'll put that note. 3:30 a.m., 1 hour before release. And then if we go back a little bit further to the last report before that, just so you can really see this whole idea of the trending before the market to give you an additional trade on the news. I'm going to go back to May 23rd. And okay, so on May 23rd, we'll see it's going down. The release is at what time? So I really want to make sure I note that on here. The release came out on May 23rd, came out at 3:30. Okay, so right there, we can get this line to draw for us. 3:30. So it came down. It was trending down. This one did, the bar closed up, but wasn't really trending towards it. So not till the release came out, and then it wasn't even a big move. But still, it was a close up. So now I'll actually notice that. I'm like, okay, it closed up on the bar 30 minutes before. And then I'll go back a little bit further. And it is good to start with like a few. Like you don't have to go pull like all 24 or whatever. To start with a few, like the last 4, and just see if you see any kind of pattern. And then you start setting rules and going, okay, what if I actually did this pattern for the last 24? Because you don't want to go through and make 24 rules. You want to definitely make sure it's consistent so you're not over-optimizing. And now this one came out at 4:30 here back on February 26 here. And so we'll go in and this release right there. That one was definitely trending towards the release the entire time. Doesn't matter what bar. Also notice the bar right before it, okay, is an up bar. And so we got an up bar, and it's trending up into the release. Keep going, and then we go back. Okay, so we got up bar trending into the release. Now, let's go over here. Let's go, okay, what about back over here in May? Okay, it's an up bar, but not trending. Okay, so we do have the up bar, but we don't have the trend going into the direction of the release. And then let's see here. We'll go on over back again one more time to August 23rd. Right there we go. Okay. And we see, okay, we do have an up bar right there, which is in the direction of the release. Wouldn't even call that necessarily a trend. It's starting to turn around a little bit, but it hadn't really turned. But we do get the up bar right before in the direction of the release. And notice, it does fly down and back up, but it is in the direction of the big move before 7. All right, and then we can go a little bit further and check out the last one, which was on November 27th. And we'll put all the pieces together on what does this mean on a potential trading system for you for tomorrow's release. Okay? Be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so what we're going into is just looking at the pound dollar preliminary, secondary GDP report that comes out tomorrow at 4:30. We're looking at the last 4 historical trades. We know the average was 70 pips high to low. And so just wanted to compare. And so this is February of last year, okay? And we see February of last year, if you got in at 1 o'clock, it moved about 50 pips. It came back down and settled out and at a very small profit of about 15 pips on that trade. So it would not have been a great trade for a straddle or strangle unless you were watching the thing and you got out. Now, if you got in at 1 o'clock, straddle would have worked out great. Would have made 80 pips up, so you definitely would have hit your 1-to-1. But we also notice is that it trends in the same direction after 3. But more importantly, what we notice is that the bar right before the release, or the last 2 bars there right before the release, are trending, in this case, towards the direction of the release. How far did it move? About 40 pips from the close of that bar right before the release in the direction of the release. So it's about a 40 tick take profit. Now, what if we went over here to the next one? What do we see? Okay, do we get a similar result? Well, we got a pretty big move, but the 12 a.m. gave us a bigger move this time at 66 pips. The 1 a.m. only gave us 44. So, and then it settled back down at about 37 to 50, depending upon which one you took. So you would have been pretty close to break even on the trade if you didn't hit your take profit or you weren't there to manage it. However, the bar right before the release, now this one didn't trend, but the bar before the release did go in the direction of the release, and this time it moved 64 pips. So you'd have to be up in the morning, like right before the release here, to actually take advantage of this, but it did move in the direction of the release. And so looking at those, that basically we saw that over and over again on each one of the trades we're looking at. Let me go down here. There we go. And so we'll look at, so this one, okay, so this one right here is from November 27th. Let me get the one right before that. There we go. Okay, August 25th. Okay, so the one, basically we talked about the first two. The third one last year, you would have moved up about 50 pips, settled about 20 pips or so. So you probably would have lost some of your money, about half of your risk on the trade. Like if you're risking 40, you would have lost about half of that on a straddle, because it most likely, unless you got it insanely cheap, would not have hit your take profit. But again, right before the release, look how it moves up. How far does it move up? About 44 pips. And then if we go in, we look at the November one. This one exploded. Definitely been a great straddle strangle, but we're not seeing that consistently over just the last year. Now, you may have that 70 pip high to low, but you're not having that 70 pip entry to high or entry to low that you may need to take profit. But again, notice again here, we're moving down. We trend back up right before the release. This bar is sort of, same high, doesn't really do anything, sort of a doji, worthless bar. But close up, flat, and again, does close up right before the release. And then market does move, and on that one, it was huge. It moved about 95 pips on that trade. So the safest method would be probably not to straddle or strangle this trade based on recent history, except for the most recent news announcement, which was rather large. It is the second preliminary GDP. That's why I wanted to dig into it, or second GDP, not the preliminary. That's why I wanted to dig into it a little bit deeper. And basically, the stats showed us, hey, the 70 pip high to low doesn't necessarily tell us the whole story. And the only way I would really probably be looking at taking this trade would be if I was going to go in and put a trade on right before the release in the direction of the trend with a limited risk spread or binary contract. I could do an at the money binary, or I could do a binary that was 1, maybe 2 strikes at most out of the money and exiting when it hit the strike, if it's 2 strikes out, or exiting a little bit above it once it hit 40 ticks above the market. All right, well, it's a whole new thing, but I wanted to show you a little bit of stats and how we put them together. Hope you all have a great day. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.